Hi guys, we've got this new test plan for the QDB Bot 2.0 logic, and it's looking at the volume changes. We're looking at that because I think if the banks and the big fish were going to look at FX and they're going to punish the retail traders, they're going to be looking at volume changes because if you think about it on the predator prey perspective, if the prey is getting larger, then that's going to be like targeted, isn't it? So if they're very strongly going one way, it's like a red flag for the retail traders, and it's a green flag for the big fish, the predators. That's the logic for it. You can see that we've broken down the test plan on the left hand side. There are some concerns and issues, which is the reason for making the video. And we have a thing called the Monte Carlo. So what it does, it basically opens up a bi-directional trade, and so it would buy and sell it sort of does like an arbitrage. So it does a buy and sell, but over a period of time. So it doesn't do it at the same time. It will buy, wait, and then we've got the strict SLTP, and then it will sell with a strict SL and TP. Now what should happen is that if we are trending on that particular currency pair, the stops will get hit, but the TP will also get hit. And because we've got a greater risk to reward than 2R, we should be profitable. Okay, so this is the theory, okay? And so you can see we're actually targeting a 4R on the test machine one. So it's an 88 pip take profit, which is quite ambitious. But if it does trigger and it compounds, it's going to be really nice. It'll be very profitable. Now, the point of test machine 1 and 2 is that we've got a slight difference on the R, okay? And so it's basically a test for the risk multiple there, right? So we've got a 4R here, 88 pips TP, we've got a 66 pips TP. I want to see which is the best risk to reward. So pending that we're successful, we're making profits on here, we can go to 5R. And if 5R is profitable, we'll go to 6R. We have to remember it's going to take a lot of stop losses because we're doing the Monte Carlo, okay, on test machine 1 and 2, and also 3, okay. So we do want to see a trend in market. If we really pump, it's going to trigger lots of take profit, but it'll also trigger lots of stop loss. But you can see that the stop loss is smaller than the take profit. So assuming that we're going to trend and we're going to really move, which we should, because of the liquidity on that pair, then it'll be profitable, okay? And test machine 3, it's got lots of checks. So it will check the sentiment. It will check whether or not we're above or below 50%. So are we a buy or a sell, which is important. And also do the dynamic check. Are they all short and have they added short? Are they long or have they added long? If they do that, it gives us a stronger bias, okay? It also does a price performance check. So if we've already moved quite substantially in the day, it won't open. And it also check the failure rate as well. The failure rate is simply, it checks the retail herd's success for that particular session. And if they're winning, then it won't open the trade. They should always be at a loss every day. If they're winning, there's something wrong, and there's probably a trap that's being formed, okay? So it does 4 important checks: static check, dynamic check, price performance check, and a failure rate check. So it's very safe, but it won't open up as many trades because these are going to ping at set intervals, and it's going to incur lots of small losses. But with any luck, we're going to get lots of TPs, okay? And here we're going to have lots of patience for this particular one, okay? Test machine 1 and 2 is arbin, so it's using like an arbitrage for direction, but there's a delay between the buy and the sells, okay? So there's a 15-minute delay. So it does wait, and then the trade runs, and then it will open the trade and put in the opposite direction. And with any luck, we'll have a trended market, and it will make lots of profit, okay? And so basically we can't have 1R because the Monte Carlo process is bi-directional, so it will always result in negative profit. So that's what that VE means. means it's negative, okay? 2R is break even, so we must always be greater than 2R. We can't have a 2R situation, because if it does buy and sell, we're going to be breaking even, and there's no point. It's completely moot. It's a pointless exercise. So we have to be greater than 2R. It's really important. And there's some concerns and issues. So pending that this fails, we'll have to wait and see, obviously. We can have remove the SLTP and have actually like an EA on there, which will trigger if we hit 5% loss to the account, it gets us out. If we've got a 5% profit to account, it just gets us out. So it's like a global SLTP, but there is a risk with that, because what's going to happen with this, say we have a big trend in market and it's triggered lots of our stop losses, and then it goes up, and we take profit. But what's happening if we do this suddenly and we move to the downside? We've taken our hedge away, and it means that we were in nice profit, and then down we come, and it's going to really chew us up, because we basically exposed ourselves to one direction. And so it would be nicely profitable, but say something happens and a news event occurs, or we've hit some supply. Perhaps we've come up to like a weekly supply, which is a really, really strong level, and we're going to reject off that supply and we're going to fall. And so therefore we've exposed ourselves to longs, and then it just really falls, and so it's going to result in losses. So the Monte Carlo is like a hedging, like an insurance policy. It's like an insurance bot. Okay, so I like the idea of this 5% profit loss to account. It's great in principle, but in case we have a big reversal, we've basically exposed ourselves. By having a static SLTP, we've ensured our exit. All right, so even though we're limiting our profit, which sucks, we've also mitigated any losses. Okay, so this is an option, but I was testing it last week, and on the EuroCAD we really pumped, and then we really dumped, and it was quite painful. So I think we need to have a defined SLTP, okay, and hopefully that makes sense. So you will need a hedging account for this. If you can't hedge, then you shouldn't take part of this, because we absolutely need to hedge, okay? And we're going to get rid of the stop loss, and then we're going to hopefully trend, okay? Why not use the volume changes for direction? Well, the thing is that there are very many fundamental and technical variables. Are we risk on or off? Like, for example, if the S&P is really falling and we're having like a 3% day, that's going to override everything, absolutely everything. The sentiment won't come into play. The fundamental forces will come in and overrule everything. So we're going to seriously risk off. It's going to impact everything, okay? So it basically whitewashes the whole testing completely. So we are basically going to do a Monte Carlo hedging policy, okay? So we're going to mitigate the fact that we may be risk on or off. So it doesn't matter about that. Are we oversold or overbought? Are we at a massive supply and demand? Again, it won't matter. We could be at a big supply, but that's fine, because the bot's going to open up a sell, okay, and then the buy. But if the buy hits the stop loss, it doesn't really matter, because we defined our exit, okay. And so it's nullifying the sentiment a little bit, but it also mitigates any risk with these other factors, okay. And test machine 3 is going against the herd, so it should be profitable, but it doesn't acknowledge the fundamentals at all. The only technical check is whether or not we've exceeded 0.6 or minus 0.6 on the day on the price performance. If we've really moved, it's like, well, it's done its move. We'll go on to the next pair. So it wants to get a nice low entry, and then it's going to hopefully start trending, and it will make lots of profit. Okay, and I've covered that already. The sentiment, are they net long? Have they added long? If so, it's a sell. If are they net short and added short? If so, then it's a buy. Notes: Test machine 3 is safer. It also open less trades and has sentimental technical filters. And compounding at set intervals was good, but heavier margin. So having this, the 5% profit to account or loss to account, it's hoping that we're making a decent return, but also it's risky because it's quite a substantial loss. It doesn't sound like a lot, but it is on a large account. It's quite painful. Okay, so that's part of that. This compounding, it will compound, but then we've limited our losses and we've also limited our take profit. So it's a lot of testing to be done. And one last test is to do the trailing stop. And so if it does pump or dump, it will ensure more profit potential, but that will be phase 2 of testing, as phase 1 is already intensive. So that's just the overview. We've got 3 tests running in parallel, and hopefully you understand about this and you understand why we're doing the hedging. And it does make sense because the bot is never going to be that clever to know if we are overbought, oversold, supply or demand, or whether or not we are risk on or risk off. I don't think there's any bot that will know that. You can't program that. So at least it hedges against that uncertainty, and it's got a greater TP than its SL, so it should be profitable. And that's the 2.0 logic. If you want to join us, then you're more than welcome. This isn't ready for testing for the public yet. I want to get lots of results. I'm going to do lots of reporting, and probably in a month's time, I think it'll probably be ready, and we'll know which one is the best one to do. And it may be that the safe option is the way to go, where it's undertaking all these checks, which kind of makes sense, but we're also limiting the amount of trades that it opens as well. And that's it. So that's the test plan. I wish you a great weekend. I'll speak to you guys soon.